Welcome to Reverse Mortgage Radio, hosted by Legend's very own reverse mortgage professor, Bruce Simmons. You have so many options with a reverse mortgage, everyone has a different opinion, and the government keeps changing the rules. You need to hear from the first certified reverse mortgage professional in Colorado to specialize exclusively in reverse mortgages, one of few in the state with the letter CRMP after his name. Bruce has the specific training and education you need to understand what you're buying. Now, here's your host, Bruce Simmons.
Hello, and welcome to Reverse Mortgage Radio. Very glad you could be here today. Hopefully you had a fantastic 4th of July this last day or two ago, and you're having a great weekend as well. I don't know about you, but it seems like the older I get, the later these fireworks keep going. I mean, it was midnight last night. I think, okay, I'm safe to open the windows. I wake up and I open up the windows and then boom, 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 fireworks all over. I don't know. Maybe I'm just becoming a grumpy old man. I don't know. But either way, I've always liked the 4th of July. The dog doesn't, but I do. Going to the fireworks shows or just enjoying the day as well. And hopefully you had a great day too. But I know there's a lot of veterans that listen to the show, and I'm a veteran as well, although I didn't see any action. I served in the Cold War, and I tell you, it was cold. I was a track mechanic in Germany, and when you're out in the field busting your knuckles on an APC or a deuce and a half, because I also worked on trucks too, or later the Bradleys, it was kind of cold. The only good thing was that the scouts always wanted a mechanic, because I was in an infantry unit, and I was assigned to a scout unit sometimes. And all they really cared about was keeping the heater going because it was cold in Germany. But that either way, it was a good time. But I always look at the 4th of July less about fireworks and more about independence. I don't want to get all political, but in my mind, way too many people think about the government as protectors and providers. And that's not the way I see it. The government, in my mind, should be protecting my and your individual liberties. That's my view of government. And the Declaration of Independence and the Constitution were set up to limit government. I mean, if you think about this Declaration of Independence, we were trying to get away from the British government. We wanted them out of our lives. That's why we declared independence. And today, I know it's corny, but I'm going to be talking about how a reverse mortgage helps with your independence. All different kinds of independence. We're going to talk actually about 5 different types of independence a reverse mortgage can help you with today. So thank you very much again for joining me. My name is Bruce Simmons. I'm the reverse mortgage manager with American Liberty Mortgage here in Denver. And if you have any questions about reverse mortgages, please call me. You can reach me directly at 303-467-7821. That's my direct line. It rings to me. It rings actually to an office that I have in my house, and I forward it to my cell phone. So I don't take text at that number. I'll give you my cell phone if you call me. But that's what most people call me on anyway. But you can also visit me online at reversemortgageradio.net. reversemortgageradio.net. Next week, the show will be up on my website. It's also available on other platforms as well, and I'm trying to get my password worked out for iHeart. So it could be on iTunes or whatever, or iHeartRadio, whatever it is. But I don't know. Me and technology just don't get along some days. You can also, on my website, download my consumer guide. It's a reverse mortgage guide about all the details about reverse mortgages. And it goes into way more detail than what I can on the radio and explaining. It would be boring radio if I did that. So I like to tell stories. So let's talk about the 5 different types of independence. I mean, real independence that a reverse mortgage can help you with. So first of all, number 1, we all think about financial independence, obviously. But you think about residential independence or even health or health care independence for number 3. Number four, you could say it's financial independence. It's part of financial independence, but debt independence, I think, is very important. And then also lifestyle. Can't forget about lifestyle independence. Let's dig into these things right now. So financial independence. First of all, well, before we get into this, let's talk about what a reverse mortgage is. I always get the question, well, what exactly is a reverse mortgage? What does it do? A reverse mortgage is most of the time an FHA insured loan. FHA stands for Financial Housing Administration, and they insure the reverse mortgage. They do not loan you the money. The loan is not a government loan. This is a government insured loan, which means that individual companies loan you this money, but it's guaranteed, or I can't say guaranteed, it's insured by the Federal Housing Administration, the government. All right. So what that means is that if the lender goes out of business, let's say, and you still have money that's available to you with a reverse mortgage, that money's going to still be available to you. It also provides something called, through mortgage insurance, it provides you protections if ever you end up owing more on the house, more on the loan, than the house is worth. Well, how could that be? Why would that happen? Because when you make payments, you pay down the loan, right? Well, you don't make payments with reverse mortgage. That's the thing that's the beauty of the whole concept, is that you never have to make a mortgage payment on this loan. Now, the house is still yours, so you do have to continue to pay your property taxes, your homeowner's insurance. You do have to maintain it, live there as your primary residence, and keep your name on title. As long as you do those 5 things, you never, ever, ever have to make a principal and interest mortgage payment. So what happens to the principal and interest? Well, principal is just what it starts out as, but interest gets added to your loan every month. It becomes what's called a negative amortized loan. That means your loan balance gets bigger and bigger and bigger because the interest that you're charged this month, you're not paying, right? Well, it doesn't just disappear. It's not a gift. So that interest gets added to the loan balance. And your loan balance grows every month. Every month you get a statement in the mail or you check your balance online and you'll see your loan balance getting bigger and bigger and bigger. And I tell everybody that you have to be okay with that. If you're not okay with that, if looking at that statement causes you more stress than the benefits that you get from the reverse mortgage, then don't do the loan. That's what I tell everybody. All my customers will tell you I said that before. I tell that to non-customers. I tell it to people on the radio. I probably said it 100 times more than 100 times on the radio over the last 7 years that I've been on the radio. So keep that in mind and think about it, because most people are paying off an existing mortgage. And that's part of financial independence, right? Getting rid of that mortgage payment. For so many people, it allows them to do so much. It provides financial freedom. That's just part of it. Getting rid of that payment is just one aspect of the financial freedom. Okay, but back to the FHA mortgage insurance. So what happens is, over time, theoretically, your home could be worth less than the loan balance, because the loan balance gets larger and larger and larger over time. If property values turned around and started falling like they did in 2008, 9, and 10, then that could cause a problem, right? You could end up owing $500,000 on this loan and your house only be worth $400,000. When, let's say, it was worth $400 when we loaned it and loaned you the money and you only borrowed $180, but 20 years later, now you owe $500 and your house went up to $800 or $900,000, but now it's down to $400. Well, what happens? That's the beauty of the protection that this loan offers, is that it guarantees that you'll never, ever, ever owe more on the home or be responsible to pay back more on the home than the value of it. If you pass away, your heirs inherit the home. They decide what to do with it. If they see the statement and they see you owe $500 and then they talk to a realtor and find out it's only worth $400, they don't have to pay. They can just sign the house over to the lender and over to the lender and walk away. Or if you have to leave the home at that time, you can just choose to walk away from that home. There'll be no equity left, but you're not responsible for any debt beyond the value of the home. That's a huge, huge financial protection. All right. So it's an FHA insured loan that does not require a monthly payment. We loan you the money. You have to pay off any existing loans on the home first. Let's say we can loan you $180,000 and your mortgage is $100,000. Then we have to pay off the mortgage. You eliminate that principal and interest payment. Maybe that's $500, maybe it's $800, maybe it's $1,000 or $1,200. I'm doing a loan for some people who just a few years ago, they refinanced their home and they thought, okay, we're going to pay this off quickly and we're going to pay 25. They set it up on a short term to where they're responsible for like $2,500 principal and interest payment. Well, now the husband's in his 80s and the wife is in her late 70s, and they're thinking, we still have over 10 years left or 10 years or more left on this loan, and it's becoming a burden with inflation and everything else. So we're doing a reverse mortgage for them mainly to eliminate that $2,500 payment. That's a huge benefit for them. Financially speaking, it'll help them be more financially secure without that mortgage payment. However, a lot of people also can set up a monthly payment with a reverse mortgage. Let's say not to where you pay things, but where you receive a payment from the lender. That payment that you're receiving gets added to your loan balance. If we set it up to where we're paying you $1,000 a month, you're going to be charged interest on that $1,000, and your loan balance grows by that $1,000 every month because you're borrowing it from the equity in your home. If we set it up to where you're receiving $1,000 a month and you're eliminating, say, $1,000 mortgage payment, that's a $2,000 swing in your favor. But remember that $1,000 a month you're receiving gets added to your loan balance. So in that case, you see two charges, actually three. I'm going to be totally transparent because you're charged interest every month. You're also charged mortgage insurance every month. This is not a free loan. The government has to charge for the protection that they provide as well. They charge 0.5% of the loan balance per year, and it's collected monthly. Let's just say you're charged $1,200 in mortgage insurance over the course of the year. That's 0.5% of the loan balance, let's say. In that case, if that's the case, then that's $100 a month roughly that gets added to your loan balance. So keep that in mind. You charge those two things, but if you're also receiving a payment, that $1,000 a month is going to get added to your loan balance. So that's a way that you can, a benefit that you can have more financial independence because you're receiving this money from the equity in your home. We can also do a combination. You need a lump sum or whatever. There's all different ways that you can receive the money. So the flexibility of it, and you can stop the payment later too. I'm dealing with a customer right now. They were receiving $1,000 a month, or $1,200 a month, I think is what they were receiving. And I just met with him and showed him how to contact customer service and fill out a form, or you can download the form online. It's very simple, and make a payment change. So you just change the payment. Say, now I only want $700 a month instead of $1,200. That's the way they set it. And they still have a line of credit available for emergencies if something big happens. So the flexibility, the no monthly payment on any kind of mortgage, no required monthly payment, although you do have to pay your taxes and insurance, and then supplemental income. Those are three ways that you can achieve financial independence with reverse mortgages. Now, let's talk about residential independence. And I'm just going to have to go through these pretty quick, but overall, a reverse mortgage can enable you to remain in your home by providing necessary funds to make essential home modifications and improvements. That's very important. Let's say you have stairs in your home. You need a lift. You want to stay there because you're close to family, your neighbors are around, but you're in a 2-story home. Or you have a basement and the laundry's down in the basement. Or you've got other things in the basement that you need to be going up and down, but now your knees are bad or your hip is bad. You need a stair lift. And that costs you $5,000, let's say. You can use the reverse mortgage to do that. You can stay in your familiar surroundings by doing that. You can also use it for home improvements. A lot of times I meet with people who've they haven't had the money to keep their home up. They can manage any stairs or they can do things, but they just cannot manage the cost to paint the house, to keep it painted, or the driveway is really cracked or something like that, and they want to get that fixed. So they can do all that stuff. But Residential independence also means maybe this home is not right for you and you want to purchase a new home. You can use a reverse mortgage for purchase. You sell your home, and let's say you cash out with $400,000. Not a lot around for $400,000 in the Denver metro area, or even Colorado Springs or Fort Collins. It's just not available. Maybe out on the plains if you want to go to Burlingame or something, or Burlington, you can do that. But you don't want to do that because your family's here. So you get a reverse mortgage, and let's say you put your $400,000 as a down payment, and we can loan you another $200,000 on a $600,000 home. Now you put down $400,000 or less sometimes, and you buy a $600,000 home, and there's no mortgage payment. It's a very, very good deal. If you're thinking you don't have enough equity in your home to buy a new one, but you really, really need a new home, talk to me. Give me a call. You can reach me at 303-467-7821. You are listening to Reverse Mortgage Radio. My name is Bruce Simmons, and we're talking about the 5 ways you can achieve independence with a reverse mortgage in celebration of Independence Day. You can also visit me online at reversemortgageradio.net and check out my website. Go to the upper right-hand corner, and you can download the entire show. If you just tuned in, it'll be available next week. You can also download my consumer guide on my website as well, reversemortgageradio.net, or just give me a call again at 303-467-7821. All right, we've talked about financial independence. We've talked about residential independence. Let's talk about healthcare independence. I know this is always a big deal. We help a lot of people to stay in their home, to age in place, because we can help them with in-home care. So the funds from a reverse mortgage can cover all different kinds of expenses, and one of which is in-home care. So let's say that you need to pay for caregivers for you or your spouse. Sometimes that's the case. That is so important that you don't do it all on your own. I've done loans for people who were the only caregiver, not just the primary one, but the only caregiver for a spouse that recently passed away. That takes such an emotional toll on you. If you get a reverse mortgage, you can have help in your home and keep your loved one in your home with you where you really want them, so that you can take care of them and oversee the care of them. That's so important, because it just, now sometimes with Alzheimer's you can't do that, or if they've got severe dementia, it's just too difficult. But you need a break. And even if you just are able to pay for somebody to come in for a few hours twice a week to give you time to go grocery shopping, maybe you need to get out to lunch with a friend, because loneliness is a killer, especially as we age. And it's very important that you maintain those social relationships. Don't get isolated with your spouse while you're caring for him. I'm not looking forward to that. It's a difficult situation. But if you can free up some equity in your home to help care for your loved one in their home, that's really important. Medical treatments too. There's a lot of times where insurance doesn't cover quote unquote alternative types of care that you want to do. I know my parents for years, my dad for years, he did chelation therapy, which insurance didn't cover at the time. I don't know if it does now or not. Also, if you are in decent health, you could pay for long-term care insurance with a reverse mortgage. Let's say you qualify for long-term care or some form of it, because there's a lot of different options with long-term care these days. But if you're in good health and you qualify, but let's say the premiums are $500 a month. Wow. Let's say you don't have that money, but it's going to pay, and it's going to really help out your family if you do tap into some equity, get $500 a monthly payment, and you can cover that cost. So those are excellent ways that a reverse mortgage can help with healthcare benefits, and as far as all those different things. Now, let's talk about debt independence. I know, okay, you say, well, that's part of financial independence. Yes, it is, but so many people have so much debt now. I mean, Obviously, government, businesses are at all-time record high. Individual families are at all-time record high. And one of the fastest growing segments of individuals are the seniors or elderly homeowners who are acquiring more and more debt. I mean, I talk with people sometimes and they just have 30, 40, $50,000 in consumer debt, not even home debt. They say, well, I can't qualify for a mortgage now because I have too much debt. Well, if you own your home free and clear, now reverse mortgage has some limitations on the amount of money we can loan up front. But if we can loan you enough money to pay off that debt along with your mortgage, that's a fantastic way to do it. So imagine not only removing a, let's say, $700 principal and interest mortgage payment, but getting rid of a $550 car payment, or getting rid of $700 in consumer debt so you can consolidate all your debt. Now, remember, a reverse mortgage is debt, okay? You're borrowing the money. That's what drives me crazy about some of these mortgage commercials. They say, oh, yeah, we can eliminate your debt. You're not eliminating your debt. You're eliminating your payments, okay? Or you're reducing your payments. So you're not eliminating debt with a reverse mortgage, or any mortgage for that matter, because you still have debt. But the debt payment is what is such a burden for people. So by consolidating those debts, it can dramatically relieve the stress in your life. Imagine that. Remember, we're supposed to relieve financial stress is what we're trying to do here. And it can also improve your credit. A lot of my customers are very, very proud of their 780 or 800 credit score. And they should be, because it's not easy to keep. But if you've got $20,000 in credit card debt, your credit score is suffering. You have way too much debt. So a reverse mortgage can help you with that. Lastly, so let's review real quick. We talked about financial independence. We talked about residential independence. We've talked about healthcare independence. We've talked about debt independence. Now, remember, you still have debt, but it's just, I should have said debt payment independence, okay? And lifestyle. This is probably one of the most important things, whether you're using a reverse mortgage to eliminate your mortgage payment. So now you can enjoy your life. You can travel. You can pursue hobbies and interests. Let's say you love woodworking, but you're working on a job as a security guard somewhere and you don't have time to do it. And by eliminating your mortgage payment, now you've got time to be able to do that. Or we can give you the money to buy the tools that you need. I've wanted to build a workshop in my garage for years, but I know that it's not going to happen because, number one, I don't have the tools to do it. And number two, I'm too busy working all the time. And even when I'm not working, I'm working in the garden. I like to garden as well, too. And in the summertime, that's my thing. I would love to have some kind of workshop so that I could go there in the winter when I'm not working in the garden in the summer to do stuff. I'm not very good at it right now. I have trouble doing anything with wood, but I want to learn more about it. Or if you want to rebuild a 1957 Chevy, or like for me, I love old trucks, the like a 1970 Ford F100 or those types of, I love those old trucks. I'd love to have something like that, but I don't have anywhere where I can work on it. Because like I said, I was a mechanic in the Army. I wasn't very good, but I would like to get better. Also, social engagement. This is so important. If you want to give back to your community, I think service clubs are fantastic. I've been a member of a Kiwanis club, 14 years now, I think. And we give to kids. We help kids. But it costs money, right? I've got to be, I go there once a week in the morning for breakfast, but there's extra money. There's the dues, there's the breakfast, there's donations. And anytime you want to give back to the community, being involved in any club is going to cost you some money. But I'm part of a Toastmasters club as well to hopefully improve my speaking. You may not be able to tell, but I love public speaking, getting in front of crowds and relaying a message in an effective manner. And I'm not the best at it, but I'm working at it, right? That costs money as well. And it takes time. And it's a stress when I'm working to have that time. Whereas if I were retired, I could donate a lot more of my time to these causes. I could volunteer more. Maybe you love schools. If you're a retired teacher and you want to donate your time to schools, things like that. You need some kind of financial independence to be able to have that social independence. And also, too, that kind of social engagement keeps you alive. I mean, it keeps you getting up in the morning. It keeps you involved in the community. Loneliness is one of the biggest killers as we age. And that's where sometimes if you're in your home and you're stuck in your home, let's say you're caring for a spouse, or you can't travel much to get out and do things. You can't drive because it's not good for you now at this point, or anybody else. But you could pay for an Uber. What if you could Uber to meetings or to volunteer opportunities? That would be awesome. But you have to have the money to do that stuff, right? These things create the social engagement that makes life worth living. I think reverse mortgages give you the independence that you need to continue living the kind of life that you want as you age. It's part of my financial plan. A reverse mortgage is going to be my financial plan when I'm old enough and I'm in a house that I'm going to be staying in for a long time. I know right now I'm going to be leaving my home at some point, probably in the next 5 to 10 years. Well, certainly 10 at the outside. But I'm going to use a reverse mortgage for purchase to do it. There's no doubt in my mind that is part of my plan. But I'm going to overfund my reverse mortgage. That's a whole nother topic I don't want to get into. But essentially, in a nutshell, if, like, for example, let's say I could get a $300,000 reverse mortgage. If I could bring an extra $100,000 to closing, then I only have to take $200,000 from the reverse mortgage to buy this home. And I can leave $100,000 in a line of credit that will grow over time. That's one of the benefits of the way reverse mortgages work, is lines of credit. If you can set up a line of credit, that amount available will grow. It's not earning interest, but it increases my ability to borrow from future equity. And whether I need it when I'm 65 or 85, I'll have a lot more money when I'm 85. Those are the 5 areas of independence that a reverse mortgage can give you: financial, residential, healthcare, debt, and lifestyle. So those independence forms of reverse mortgage are very important in my mind. And I hope you have a rest of the fantastic Independence weekend. I hope you really enjoyed your 4th of July. It was a great weather week or weather day. And I'm looking forward to talking with you at some point in the future. Please feel free to call me directly. My name is Bruce Simmons, 303-467-7821. You have been listening to Reverse Mortgage Radio, and you can reach me on reversemortgageradio.net. Download my consumer guide, and I'd be happy to talk with you about your specific situation. Again, Bruce Simmons at 303-467-7821. Thank you very much, and hope you have a great rest of the weekend.
Call Bruce Simmons today. Ask about his free Colorado Consumer Guide, 303-467-7821, or reversemortgageradio.net. Bruce will come to you anywhere across the Front Range to make sure you understand how reverse mortgages work. Regulated by DORA, NMLS number 409914. American Liberty Mortgage is an equal housing lender.